Hey, good morning and good afternoon, everybody. Welcome to the Washington Policy Pulse again. Again, my name is Nathan Dean. Thank you very much for attending. Coming to you from the New York City office, at 3731 in Lex. We're going to be running around Manhattan today and tomorrow, so if you're up for coffees, just shoot me an email and we'll see if we can get it done. But what I want to do this week is just briefly show you some of the polling numbers again, just to because things have been changing on a weekly basis. That's been kind of interesting here. So I'm going to go ahead and share my screen, and I'm going to show you the most latest in terms of the polling data. Let me go ahead. Okay. So, what this is the Real Clear Politics non-toss-up implied electoral college count. Remember, for those of you who aren't in the United States, just remember that it's not the popular vote that wins the election, it's the electoral college that wins the election. You need 270 to win. And as of this moment, and essentially I check this on every Monday, but you can see the trends here are showing more favorable in terms of President Trump, that it's showing a 312 to 226. This is last Monday, he was at 306. And then prior to that, he was at 281. And you have to go back a couple weeks until the last time that Vice President Harris was in the lead at 276. And this is just due to the weekend polls that are coming in from the swing states. Now, like I've said before, that this is not an election about, trying to find that swing voter that is undecided. I'm not going to show you here, but I have another chart that actually, you know what? Let me go ahead and show it to you. We'll show you if you go to WSL election. Um, Let me go ahead and show this chart. This is the amount of independent voters that are still out there that are essentially have not made up their decision yet, and it's actually quite low. Let me go ahead and as much as I love this sheet, it's very difficult to find what the ones you're looking for. And if I can't find it in the next 2 seconds, I'm going to move on. But like I've talked about before, this is actually more of an election about turnout rather than an election about trying to find those individual voters that are. Oh, come on. Okay, I can't find it, so I'm just going to move on. But essentially, this is an election. This is an election about turnout. This isn't an election about trying to find that independent. Most of the swing states that are out there, the amount of voters that have "quote unquote" undecided is somewhere between 0.5 and 1.5%. And you remember, 150 million Americans are going to potentially vote in this election. It's 100,000 that are ultimately going to decide who who the president is. Most likely, those aren't individuals that are undecided as of today with early voting and so forth. It's a race about turnout. You may have heard me say this before, that this is a race between President Trump, Vice President Harris, and the couch. And that is what both candidates are doing at the moment. President Trump has been in Pennsylvania. Vice President Harris was in Georgia. President Trump will be here in New York City on Saturday night at Madison Square Garden. But with 2 weeks until the election tomorrow, you're just going to see all about turnout, all about turnout, and all about turnout. But again, I can't tell you who's going to win the election. I can show you polls that suggest that President Trump is going to win, like what I just showed you. I can show you avenues that Vice President Harris will win. But what we're telling everybody is it comes down to the state of Pennsylvania. Now, as you get into election night, and if you wake up around 3 or 4 o'clock in the morning, what I would be looking for is essentially Pennsylvania and North Carolina. Now, when it comes to Pennsylvania, that is Vice President Harris's one way of winning the presidency. If she doesn't win Pennsylvania, it's unlikely that she will win the presidency. If she does win Pennsylvania, then President Trump has another avenue of essentially winning out North Carolina, Arizona, Nevada, and so forth like that, but it becomes much difficult. So if I'm awake at 3 o'clock or 4 o'clock Eastern, or if you're in Europe, when you wake up the next morning on Wednesday, look for those Pennsylvania results, and you should get an idea of where this election is going. My personal belief is that we will know probably within a day or two after the election where this is headed. I think it's going to be very similar to what happened 4 years ago, where you had this general feeling that President Biden was going to win, but they didn't announce it until Saturday after the election. So I think that's probably what's going to play out here. So a couple other things I want to talk about. Well, Governor Waller over at the Federal Reserve gave a speech last week talking about decentralization of currencies. And we got a bunch of questions from clients on this idea of central bank digital currency. There was this, this was sort of, Governor Waller's essential take was that this is going to be something that governments and jurisdictions are going to have to deal with, aka this DeFi, this decentralized currencies and so forth like that. This is something that's going to be placating over the next few years. And so the question came in, is the Fed going to unilaterally declare a central bank digital currency? Now remember, central bank digital currencies do exist. China has one, there are others out there and so forth, but the United States really hasn't moved forward with one. Now, it's our view that there's about a 30% chance of a central bank digital currency taking place over the next 3 to 5 years. Why? Because while you'll see statements from the Fed saying they're open to the idea, anytime Jerome Powell's been asked this question in testimony, for example, he always says we're not going to use this unless the president or Congress directs. Now, there's a lot of leeway there, president or Congress, not a law, but if the president were to come out and say, look, Fed, I want you to do a CBDC, in Jerome Powell's statement, you could say, yes, he's going to do that. But our view is that they're nowhere near close to the idea of creating a CBDC. I like to joke that they'll say, yes, we're working on it. Well, who's actually working on it? Probably two folks over in a windowless room. Apologies if you're actually from the Fed and you're working in a windowless room. But there's probably a couple of folks over the Fed that are looking at it, but it's not actively being pursued and so forth like that. What the caveat is that if a central bank digital currency gets more popular abroad, then you could see the Fed come out and say, we're going to do this. But before she left for Treasury, former Governor Lael Brainerd said that if the Fed were to actually move forward with the CBDC, it would probably take them 5 years, and this was 2 years ago. So again, that 3 to 5 year time frame. Another thing I want to talk about is I finally got around to looking at an FDIC proposal that has to do with Synapse Financial Technologies. And if you remember, Synapse was a fintech firm that failed a couple of months ago, and a lot of folks actually had money with Synapse and banks that are connected to Synapse, and they weren't able to get their monies back because Synapse had all of their monies pooled into one custodial account. So if my bank, for example, if I have my money in a bank and my bank goes under, the FDIC can come in and say, all right, I see Nathan Dean's account here, so therefore we're going to, give Nathan Dean his FDIC insurance up to $250,000. Well, in this fintech arrangement, it doesn't exactly work like that when the fintech had all the monies pooled into one custodial account. So what the proposal came out and said is that we're going to require banks to have adhere or enhanced record keeping requirements. Now look, why am I writing about record keeping requirements? That's not something that usually excites us over on the equity research side. But the reason why I'm writing about it is because I read the proposal, and from the bank's perspective, it's not something that they're really going to have to worry much about. If you're in the compliance side or legal side, you'll probably have to do some additional work. The FDIC actually estimates it's only going to cost each bank around $300,000 to implement that. Those are always low. I mean, if just thinking about the amount of man hours that go into any type of stuff, that's usually low. But the reason why I'm writing about this is because it's indicative of how fintech regulation is going to take place over the next few years. I don't think you're going to see any new rules. I don't think you're going to see any new regulations, but you're going to see this where banks are now going to be much more tougher on fintech, and banks are going to require their fintech partners to be a lot more enhanced in terms of their own due diligence. And so this proposal is something interesting to watch out for, because I think the bank response to this proposal is meaning that they're going to go to their fintech partners and say, look, we need you to start adhering to all of these protocols and so forth. If we're going to do this, you're going to do it. And yes, I'm a publicly traded bank that has thousands of people that can work on it. If you're a fintech startup, on the other hand, it could be a little bit more difficult. So certainly something to keep in mind. Other interesting thing is this is one of the few proposals that came out from the FDIC that was voted 5-0. There was bipartisan support on this. There was a little bit of issues in terms of, I think in the comment period, you're going to see a couple of little issues in terms of the breadth of the proposal, but whether Vice President Harris or President Trump wins, even if the FDIC flips, I think you could see this proposal moving forward next year. Other thing I want to talk about is tomorrow, the Consumer Financial Protection Bureau Director Rohit Chopra is expected to give a speech laying out the next version of the CFPB's, the finalized version of the CFPB's open banking proposal. Now, this is something where I'm going to have to eat crow on, because I didn't think it was going to happen in October, even though Director Chopra said back in June that they were going to get it out in October. So CFPB 1, Nathan 0. But what this proposal essentially will do is it will require banks to open up their records in terms of maintaining information so that as me as a customer will be able to go to a bank, and I'm going to pick on Bank of America and Citigroup because those are the two that just popped in my mind. Let's say that I'm a customer with Citigroup. Under the CFPB proposal, I can now go to Citigroup and say, hand over my information, my personal information. They're going to hand it over, and I can go to Bank of America and I can give that information to Bank of America, and all of a sudden Bank of America can open an account for me almost the same day. And so you're going to be able to switch from banks much faster under this type of new proposal. And then there's also a fintech argument here because if I don't want to go to Bank of America, if I want to go to a fintech, I could also do that as well. And so the speed of way a customer can actually move between banks is going to dramatically increase under this proposal slash final rule. Now we'll see what the final rule looks like tomorrow. Again, Rohit Chopra is going to be laying this out in a speech. I'll be watching it. So if you have any questions on that, we're also going to be looking to see if anybody's going to sue. I have not heard of any lawsuits. I was literally just telling my colleague Elliot Stein this morning. I have not heard of any lawsuits out there, but people like suing the CFPB right now. So again, stick around and it could happen. So last thing I want to talk about this week is also IMF World Bank Week. So if you're in Washington, you're going to see lots of motorcades with different flags on them. We like to joke it's our small version of UN Week because even though our traffic doesn't get as bad as UN Week, I understand up here. But the last thing I want to talk about is on Wednesday at 10 a.m. Eastern, my colleagues Jen Reed, Elliot Stein, Andrew Silver, and I, so antitrust, financial litigation, and tax, we're going to be doing a virtual roundtable that's open to the press. So if you do attend, just note that it's open to the press and anything can be on the record. But we are going to be doing a roundtable laying out everything you need to know for the election. So if you want access to that, please shoot me an email. I'll send you the Zoom link. We certainly would love any type of attention and so forth like that. So I'm going to pause there and just want to confirm before I move on, are there any questions, any concerns? Feel free to put that in the chat. I'm going to just essentially talk for about 30 seconds. Otherwise, I'm going to give you back to your day and say thank you very much. Oh, we just saw one come in. Okay. Themes to watch for at the IMF week. Well, the way I would view it is essentially is that it comes down to tariffs. I mean, obviously, I think, obviously, I would say that Middle East, Ukraine, Israel, and so forth like that, Taiwan, those are general themes that are always hanging over this. But I think you're going to see a lot of chatter of President Trump's tariffs. Just remember last week, our editor-in-chief, John Micklethwaite at Bloomberg News, gave an interview at the Economic Club of Chicago, and President Trump said, and I'm paraphrasing here, tariff was the best word or his favorite word out there in the dictionary, something like that. And so I've gotten a lot of questions about tariffs in terms of like, is this a valid threat, risk, or opportunity? And the answer is absolutely yes. It is a risk or an opportunity. Just remember, it's a risk or an opportunity depending on where you are. Because remember, like I think I've said before, the power of the presidency is a lot more powerful. And so if President Trump wins, like the polling suggests he will, in the first half of next year, you could see an executive order saying that, 60% goods on all things coming in from China now have a tariff on them. He's talked for if, he said in that interview that if China were to invade Taiwan, you can invade Taiwan, but we're going to place 300% tariffs on you. So again, I think there's just a lot for IMF week and World Bank week, it's going to be lots of talk about the election and so forth. But, if anything really comes up, I'm going to, I'll mention it on next week's call. So just want to say thank you very much for attending. We really appreciate you attending. If you do have any other questions or want to attend our thing on Wednesday, I will certainly send you the Zoom link, but thank you again and have a great week.